This first question comes from Bill Mitchell. I received more questions about this than any other question. He writes, Warren, in a 2003 Fortune article, you argued for import certificates to limit trade deficits and said these import certificates basically amounted to a tariff. But recently, you called tariffs an act of economic war. Has your view on trade barriers changed, or do you see import certificates as somehow distinct from tariffs?
Yeah, well, the import certificates were distinct, but their goal was to balance imports against exports, and so that the trade deficit would not grow in an enormous way. In fact, it would have, and it had various other provisions in it to help third world countries at that time, as they were called, to perhaps catch up a little bit. And they had a variety of aspects to them, but basically they were designed to balance trade. And I think you can make some very good arguments for the fact that balanced trade is good for the world, and the more balanced trade there is, the better. It will continue to be better for cocoa to be raised in Ghana, and coffee in Colombia, and a few things. And over time, the American industry has gone from being an agricultural country. This was nothing but an ag country. I mean, virtually, and that was only 250 years ago. And we have become a very industrial country, and we did not want to make that a situation, in my view, where we ran greater and greater deficits, building up greater and greater debts against the country. So I designed this import certificate thing, which Charlie thought was a little too much like Rube Goldberg. I don't know whether that name is, but it's gimmicky. But it's certainly a lot better than anything I think than we're talking about now. And there's no question that trade can be an act of war, and I think it's led to bad things. Just the attitudes it's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. And I don't think it. That's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. And we want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we've won, and other countries are envious. So my import certificate idea, which went no place, I think we've got extra copies. We've not a great demand for the copies. If anybody did, and if you'd like, and write the office, I think we could probably send you a copy of it. But the main thing to do is not use trade. Should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing 250 years ago. There's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise. I do think that the more prosperous the rest of the world becomes, it won't be at our expense. the more prosperous we'll become, and the safer we'll feel, and your children will feel someday. So that's. But don't expect my import certificate idea to go up down there with Adam Smith's Wealth of Nations or anything.
This next question comes from Advait Prasad in New York. He writes, today, Berkshire holds over $300 billion in cash and short-term investments, representing about 27% of total assets, a historically high figure compared to the 13% average over the last 25 years. This has also led Berkshire to effectively own nearly 5% of the entire U.S. Treasury market. Beyond the need for liquidity to meet insurance obligations, is the decision to raise cash primarily a de-risking strategy in response to high market valuations, or is it also a deliberate effort to position Berkshire's balance sheet for a smoother leadership transition, providing Greg Abel with maximum flexibility and a clean slate for future capital allocation decisions? And I will add one line from another shareholder, Mike Conway, who asks, are you encouraged you may see some fat pitches coming your way?
Yeah. Well, I wouldn't do anything nearly so noble as to withhold investing myself just so that Greg could look good later on. Now, if he gets any edge when I leave, I'll resent it. So the amount of cash we have is we would spend, well, we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make. When something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. I mean, it isn't like every day. The long-term record is sensational, but that is not a product. And I've had 200 trading days times 80 years. It's 16 million trading days. It kind of, 16,000 trading days. It would be nice if every day you got 4 opportunities or something like that, and and they were expected to be equally attractive. If I was running a numbers racket, every day would have the same expectancy of that I would keep 40% of whatever the handle was. And so the only question would be is how much we transacted. But we're not running that kind of a business. And so we're running a business which is very, very, very opportunistic. And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50, and that we never concentrated enough. So that we would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like $50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper, actually, for people who are passive investors just to make a few simple investments and sit for their life. But we've made the decision to be in the business, so we think we can do a little better than that. by behaving in a very irregular manner. But if you told me that I had to invest, let's say that we have a roughly $40 billion a year coming in, and we start with 335. If you told me I had to invest $50 billion every year till we got down to $50 billion, that would be the dumbest thing in the world to invest in that manner. Things get extraordinarily attractive very occasionally. The long-term trend is up. Nobody knows. And I certainly don't know. Greg doesn't know. Ajit doesn't know. Nobody knows what the market is going to do tomorrow, next week, next month. And nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about. And but it has no value. I've never found anybody I wanted to listen to on the subject. And on the other hand, I've found that leafing through things like that big Japanese book that I can't read anymore, that's a treasure hunt. And every now and then you find something, and occasionally, very occasionally, but it'll happen again, that I don't know when. It could be next week, it could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years, and then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. If you get to be 115 or something like that, it's almost a cinch. Particularly if you're a male. I mean, all the records are held by females in terms of age. And I tried to get Charlie to have a sex change so he could test out whether... he did pretty well for being a male, I'll put it that way.
Hi, Mr. Buffett. My name is Daniel, and I'm from Tenafly, New Jersey. First of all, I just want to say how grateful I am for getting the opportunity to ask you a question. When it comes to your principles of investing, you often talk about how important it is to be patient. Has there ever been a situation in your investing career where breaking that principle and acting fast has benefited you? Thank you.
Well, that's a good question. And there are times when you have to act fast. In fact, we made a great deal of money because we're willing to act faster than anybody around. Jessica Toombs is, I think she's the stepdaughter or step-granddaughter of Ben Rosner, a manager of ours. And in 1966, I got a call from a fellow named Feldsteiner in New York, and he said, I represent Mrs. Annenberg. And there were actually 9 Annenberg sisters, I believe, before Laura Annenberg came along as the son. But he said, we have a business we'd like to sell you. So I called Charlie up, and I got a few details, and it sounded very interesting. And Charlie and I went back to the office of Will Feldsteiner in New York, who was a marvelous guy. Never met him since, but he was handling things for Mrs. A. Simon, but her name was Annenberg, and her husband had been the partner of Ben Rosner, but he had died, and Ben got kind of tense about working with her, and so he offered us this business at a bargain price. He offered us a business for $6 million that had $2 million of cash. It had a $2 million piece of property in a 900 block of what's the key street in Philadelphia down there, Market Street, and it was making $2 million a year pre-tax, and the price was $6 million. And Charlie and I went back to this place, and Ben Rosner was there, and he just was upset about doing business with his partner's widow. She was extremely wealthy, and he wasn't enjoying it. He was very nervous about selling it, and he said to me and Charlie, he said, I'll run this business for you until December 31st, and then I'm out of here. And I got Charlie, we went out in the hallway, and I said, if this guy quits at the end of the year, you can throw away every book on psychology you've ever read. And so that began we bought the company and had a great relationship. And did I know that morning when I got a phone call from Will Feldsteiner that did his background about it? I've had a couple of times, and that was one of them, where people in the East felt that they had a stereotype in their mind of what people from the Midwest were like. And Ben had been married. His first marriage was to a woman from Iowa, and he just figured that anybody from the Midwest was okay. And the trick when you get in a business with somebody, or get in a room with somebody like that, and they want to sell you something for $6 million that's got $2 million of cash and a couple million of real estate and is making $2 million a year, you don't want to be patient then. You want to be patient and waiting to get the occasional call. My phone will ring sometime, with something that, wakes me up. I may be sleeping in there or something, but you just never know when it'll happen, and that's what makes it fun. I mean, so patience. It's a combination of patience and a willingness to do something that afternoon if it comes to you. You don't want to be patient about acting on deals that make sense, and you don't want to be very patient with people that are talking to you about things that will never happen. So it's not a constant asset. It's not a constant liability to be patient. Greg, you.
Well, Warren, I was going to add, as you're being patient, I happen to know, and I think that goes for our Ajit also and all our managers. Very patient when we're looking at opportunities, and as you touched on, we want to act quickly. But while we're being patient, never underestimate the amount of reading and work that's being done to be prepared to act quickly. Because we do know, be it equities, but I would include a variety of private companies that when the opportunity presents itself, we're ready to act. And that's a large part of being patient, is using it to be prepared.
Yeah, and of course it doesn't come in anything like an even flow. I mean, it's the most uneven sort of activity you could get into. And the main thing you have to do is you have to be willing to hang up after 5 seconds, and you have to be willing to say yes after 5 seconds. And,
absolutely.
And you can't be filled with self-doubt in the business. You just forget it. It isn't going to work. Go into some other activity. But you also, one of the great pleasures, it is the great pleasure actually in this business, is having people trust you. And that's really why work at 90 when you've got more money than anybody could count? You know, if they started today and having machines that are helping them and everything else, it means nothing in terms of how you're going to live or how your children are going to live or anything else. But both Charlie and I, we just enjoyed the fact that people trusted us, and they trusted us 60 years ago or 70 years ago in partnerships we had. And we never sought out professional investors to join our partnerships. Among all my partners, I never had a single institution. I never wanted an institution. I wanted people, and I didn't want people that were sitting around and having people present to them every 3 months and tell them what they wanted to hear and all that sort of thing. So, and that's what we got, and that's why we've got this group here today. So it's all worked out. But that it's you don't want to be patient when things are going your way. When the time comes to act, you want to get it done that day.
My name is Benjamin Graham Sanderson from Pasadena, California. Warren, thank you for all you've taught us over the years. Earlier you said nobody but Steve Jobs could have created Apple, but nobody but Tim Cook could have developed it like he has. Warren, nobody but you could have created Berkshire, and I presume you view Greg as an outlier among outliers. But he seems so normal. Sorry, Greg.
You know, that's a nice way of saying it's not normal, actually, but I appreciate it.
So I was hoping you could share what specifically about Greg makes him your preferred successor. And Greg, we're excited to get to know you more over the next few decades. Thank you.
Thank you.
Yeah.
Thank you.
Well, you've hit on the most important question, in terms of the business. We've got a wonderful group of businesses. We've got an ability to do things that nobody else can do, which is hard to get in a capitalistic system that's been developed as fully as the United States has been. I mean, imagine being able to create something that in a very, very, very big playing field, you'd really be very, very hard to develop anything like it. I don't think you could develop the people around it, let alone the capital position, and the history and everything else. And the answer, of course, is that it does take a long, long time, and it takes getting around you a small cadre of people, which then spreads out somewhat. But where you've got mutual trust, where people do more than their share. And I've been around a lot of businesses over the years, and by nature, I'm somewhat critical of everything. I mean, I'm looking for what's wrong in things, because that's part of investing is looking, what are you missing? But we have, we've got people that, if they're asked to put on a show like this, instead of doing whatever their regular job is, they participated. I went around the groups of people that were exhibiting yesterday for an hour and a half. And these are people that are thanking me, and totally enthused about coming and doing a lot of work for which they don't get paid anything extra. And I don't know anything about the arrangements the individual companies make, but they work hard and they enjoy their work. And, you really want to work at something you enjoy. I've had 5 bosses in life, and I liked every one of them, and they were all interesting. I still decided that I'd rather work for myself than anybody else. But if you find people that are wonderful to work with, that's the place to go. And I've told my kids that basically, that you don't get lucky like I did when I found at 7 or 8 years of age what really interested me. You know, it could have taken a lot longer, but you want to find the song, find the sound. There's a movie called The Glenn Miller Story, and Glenn Miller went on from having a broken down band for 15 years to turning out the first. He found the sound and created the first gold record. I don't know whether any of you know what it was, but it was the Chattanooga Choo Choo in 1941, I think it was. And he turned around from being a nothing with the band that he had till he found the sound. And I always have told my kids ever since that their sound isn't my sound, you know, but and you don't find it necessarily on the first job you take because you got to eat, you know. But if you get lucky like I did, you find it when you're very young, and then just keep doing it, and don't worry too much about starting salaries, and don't worry about be very careful who you work for, because you will take on the habits of the people around you. So there's certain jobs you shouldn't take, but you've got the greatest country in the world, and you've got the greatest time in the world. So I would say that while I'm handing this over to Greg, that you can't even dream all the dreams that you could have about a place like Berkshire. But the big thing you have to do, though, is to be sure you can play the next day. I mean, in terms of financial activities on a meaningful scale, you don't want to go. There was a book about, what was the name of that book? You only have to get rich once. I mean, you don't want to do anything that risks what's been created. So if very stupid things are happening around you, you do not want to participate. If people are making more money because they're borrowing money, or they're participating in securities that are really pieces of junk, but they hope to find a bigger sucker later on, you just have to forget that. That'll bite you at some point. And the basic game is so good, and you've been so lucky to be born now. I mean, if I'd been born in 1700, I'd say, I want to go back in the womb. What the hell with this? I mean, it's just too hard. But now I've come along to do something where I can just play around all day with things I enjoy doing, and it's really it's a pretty wonderful life. Anything, Greg, you want to add or subtract from that?
Nothing to subtract, but I would always just say it couldn't be more, as I've said in the past, more humbled and honored, obviously, to be in this role. But to have actually been part of Berkshire for, Warren, it's now 25 plus years, had the opportunity to be part of Berkshire, and to work with you and Ajit and our board, but many other people in our company. And as you touched on, when you find something like that, and you find something like that, like Berkshire, that's so special, you fall in love with it, and it becomes just what you want to do every day, and it's just an incredible opportunity. So thank you.
And to the gentleman who asked the question, if you don't find it immediately, don't starve to death or anything in the meantime. But you will find it, and you'll find it in the right individual. In a sense, it's somewhat like finding the right person in marriage. I mean, probably the first. Some of you may have married the person you met on your first date. Although I guess they don't even have dates anymore. But it's sometimes it pays to wait too.
My name is Marie. I'm from Melrose, Massachusetts. Thank you for the time today. As a young person interested in investing like myself, I would love to hear your insights, Mr. Buffett. What were some pivotal lessons you learned early in your career, and what advice do you have for young investors who are looking to develop their investment philosophy? Thank you.
Well, those are good questions. I wish I thought of them myself earlier in my life. Who you associate with is just enormously important, and don't expect that you'll make every decision right on that. I mean, but you are going to you're going to have your life progress in the general direction of the people that you work with, that you admire, that become your friends. I mentioned a few fellows that have died in the last couple of years. Well, all of those people were people that if we were working together on something 1/10,000th the size of Berkshire, I mean, they'd be the kind of people you'd choose. They're people that make you want to be better than you are, and you want to hang out with people that are better than you are and that you feel are better than you are, because you're going to go in the direction of the people that you associate with, and that's something you learn, and of course you learn it late in life. It's hard to really appreciate how important some of those factors are until you get much older. But when you've got people around you like Tom Murphy and like just name them, Sandy Gottesman, Walter Scott, you're just going to live a better life than you do if you just go out and look at somebody that's making a lot of money and decide you're going to try and copy them or something of the sort. So I'd try to be associated with smart people too, where I could learn a lot from them. And I would try to look for something that I would do if I didn't need the money. I mean, what you're really looking for in life is something where you've got a job that you'd hold if you didn't need the money. And I've had that. And Charlie had it for a very, very long time. In fact, all the fellows I named had it. And they also, every one of those ones I named, they always did more than their share. And they never sought more than their share of the credit. They just behaved as the way you'd like anybody you work with. And when you find them, you treasure them. And when you don't find them, you still keep doing whatever causes you to eat or enables you to eat. But you don't give up on looking around. And you'll find people do wonderful things for you. I mentioned earlier going down to Geico and knocking on the door when the door was locked. I mean, who knows what was behind that door till I went in, but in 10 minutes I found that I had a man that was going to be just wonderfully helpful to me. And of course, if somebody's going to be helpful to you, you want to try to figure out ways to be helpful to them. So you get a compounding of good intentions and good behavior. And unfortunately, you can get the reverse of that in life too. And with a lot of, I was lucky in having a good environment for living that kind of a life, and other people, have a whole different environmental situation. They have to overcome it. But don't don't feel guilty about your good luck if you've got, if you've got, well, if you live in the United States, there are 8 billion people in the world and there's 330 million in the United States. You've already won the game to a great degree, and then just keep making the most of it. But you don't want to associate with people or enterprises that ask you to do something that, or tell you to do something that you shouldn't be doing. And that's one of the problems. I mean, different professions select for different types of people. And it's interesting to me that in the investment business, so many people get out of it after they've made a pile of money. You really want something that you'll stick around for, whether you need the money. Greg doesn't need the money. Ajit doesn't need the money remotely, but they enjoy what they do, and they're so damn good at it. It just, well, I've had the advantage of seeing how that works over time. The best manager I ever knew, and there's a lot of contention for who that would be, but actually was Tom Murphy Sr., who lived almost 98. And I've never seen anybody that could get the potential out of other people more than Murph could. I mean, if you wanted to become a better person, you wanted to work for Tom Murphy. And there are all kinds of successful people that really don't have that don't bring that to the party. And I'm not saying that's the only way to succeed, but I think it's the most pleasant way to succeed for sure. And I think that the Berkshire experience is pretty dramatic. I mean, to operate with Sandy Gottesman from 1963 until he died a couple years ago, Walter Scott for 30 years, and Creighton operated with him for 25 years or so.
Right,
it was.
yeah, 30.
Yeah, you really can't miss it. You'll learn all the time, but you'll not only learn how to be successful in business, you'll learn how to be successful at life. And so that's my recommendation. And for some reason, apparently you live longer too, because it's pretty amazing. I mean, these people I'm talking about, including myself, I like to attribute it to this and a few other things, but I think a happy person lives longer than somebody that's doing some things that they don't really admire that much in life. Okay. Let's move on to, I guess it's Becky next.
The first quarter ended March 31st, and it did show that Berkshire's cash pile expanded from the end of the last year. But the greatest market turmoil came in April. Martin Devine, a shareholder from Scotland who is attending the meeting today, wants to know, has the recent market volatility presented Berkshire with opportunities? And Martin just wrote in an addendum in the last 40 minutes or so, pointing out that you mentioned Berkshire almost invested $10 billion recently, and wanting to know if you could talk more about that.
Well, then, I can give you a good answer to the second part, which is no. But 10 billion wouldn't have done that much, That's the other side, another side of it. What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, is really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a fairly short period of time, 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's like going from 100 to 11. This has not been a dramatic bear market or anything of the sort. I mean, it was, like pointed out, if I've had 250 trading days a day, for however many years I've been old enough to trade stocks. I've got 17 or 18,000 days. There's been plenty of periods that just are dramatically different than this. I mean, when the day I was born, the Dow Jones was at 240. And that was August 30th, 1930. And between that and the low, it went from 240 to 41. I mean, that's, so if people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world, and you will see a period certainly in the next 20 years, you'll see a period that will be in what somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically. The world makes big mistakes, and surprises happen in dramatic ways. And the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market, and that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know people have emotions, but you got to check them at the door when you invest. Okay. Station 8, please.
Good morning, Mr. Buffett, Mr. Greg, and Mr. Ajay. My name is Peter Chen. I'm from Shanghai, China. This is my first time attending this shareholders meeting. I would like to ask a question about the wisdom of life. Have you ever encountered any major setbacks or low points in your life? And how did you get through and overcome them? Thank you very much.
Yeah. Well, everybody gets setbacks, and some people have particularly bad luck in that respect, and others get through with fairly minors. But Charlie, he had setbacks. I had setbacks. I mean, it's part of life, and they're not any fun. I don't have any great advice for you about having the time of your life while you're having some major setback. But it comes with lifetime. you certainly have a setback when you die. And so everybody's got that setback guaranteed to them. But some people get, and I mean, it isn't a laughing matter in a sense, because, I mean, people get extraordinary bad luck, and other people get extraordinary good luck. Usually the people who get good luck don't really think it was so much luck as themselves, but you're just going to have it. I think that you're less likely to have it in terms of medical problems, in terms of, various things in life. I mean, you were born at a good time. I mean, if you look all the way through the history of China, when would you rather have been born? 100 years ago, 500 years ago, 1,000 years ago, or now? It's just hands down, you'd be lucky. I mean, if I came from 20 generations of shepherds, I think I get kind of tired of my life just looking at these sheep every day. But we can sit here and I can watch Nebraska not quite play the same game of football that we played 20 years ago, but I mean, everything in life has been made so much better that you've got to figure that you do a lucky straw by, staying in the womb for a couple 100,000 years and then just emerging at the right time. So I would focus on the things that have been good in your life rather than the bad things that happen, because bad things do happen. But it can often be a wonderful life. You could get terrible breaks in it. I mean, so far that really hasn't happened with me, but it's happened with some of my friends. But you get some bad breaks from time to time. But for 94 years, I've been able to drink whatever I want to drink, and they predict all kinds of terrible things for me, but it hasn't happened yet. So, and it's true. I mean, if you look at what pro football players are making now and everything compared to what they were making 30 or 40 years ago, you can say, well, isn't that wonderful? But if you look at the lifespan of professional athletes, after a while you get used to you really decide that you're better off if you really weren't the first one chosen to be on the baseball team or the basketball team or anything else. The human body, well, Charlie and I think I speak for the others to some extent, that we never really exercised that much or did anything. We were carefully preserving ourselves for the years. So look at the bright side of things to the extent that you can, and you're lucky enough to you're here today. You're healthy. You come from a long distance, and you're getting a chance to learn more about something that interests you, and compare that with the situation a couple 100 years ago that you would have been offered. So anyway, that's enough moralizing.
This question comes from David Rubin, a shareholder from Scottsdale, Arizona. It's a question for Greg. We've heard over the decades and are familiar with Warren and Charlie's investment thesis and their circle of competence. During the first 10 years after taking over as CEO, Greg will be tasked with allocating more capital during that time than Berkshire has had to allocate in its history. Given this, I'd like to hear from Greg about his views on capital allocation, particularly into new businesses.
Sure. So this bar is not too high. No, it's, but very fortunate when you think of Berkshire, again, and we've talked about this, where we start from, and I'll clearly touch on the investment and the related investment allocation, but we start from a great place where we've got a great culture within the business. We have values that we as a management team and really as defined by Warren and those Charlie and everybody associated with the business. We've got great values that really set Berkshire up well for the future. And obviously, as we deploy capital and allocate capital, it's critical to Berkshire as we go forward. And equally, it's around managing risk. But when I think of our values, there are a couple that are absolutely critical. One, will maintain the reputation of Berkshire and that of our company. And I view that in investing or how we operate things across each of our businesses. That will always be a priority and something that will ensure is in the forefront of our minds. I think equally, as we then look at our back to Warren's balance sheet comment, we will have a fortress of a balance sheet. And we want to, I thought Sue Decker, our lead director, said it well yesterday, we've got a significant set of cash right now, but it's an enormous asset to have that. And that will continue to be a philosophy. Yes, when we can deploy it, we'll deploy it well, and I'll come to that. But equally, we do recognize it as a strategic asset. And it allows us to weather the difficult times and at the same and not be dependent on anybody. So again, that will be an investment philosophy. We will remain Berkshire, and we will never be dependent on a bank or some other party for Berkshire to be successful. Thank you. I would then move to touch on allocation of capital will be absolutely critical, but with that comes management of risk and understanding risk. And that falls upon all our managers, insurance, non-insurance, but we'll bring that across Berkshire. And then the other value I would touch on, but that really relates to where I'm going, is ultimately we have a great set of operating companies that do produce significant cash flows, be it in the insurance companies creating float or our various non-insurance companies producing significant cash flows on an annual basis. We intend to continue to ensure that's the strength of Berkshire as we go forward. And it's absolutely critical to our long-term success. Now, with those cash flows and with the float, and then equally as touched on, we have significant resources already on our balance sheet. We'll really continue to move forward with a very similar philosophy, or it's an identical philosophy to what we've had currently and for the past 60 years. We'll start by looking at those opportunities within our business, and by that I mean within our insurance, non-insurance businesses. Are they properly capitalized and have the opportunity to manage their business? And that will continue to exist. They'll operate in an autonomous way, but in the end, Berkshire still manages the capital that will go into those businesses or what potentially will come out of those businesses. Equally, the next opportunity is to acquire businesses in their totality or 100%. And there are great times when we can do that. Warren touched on, we had one that was interesting in the last quarter, the $10 billion acquisition. But again, the value relative to the risks have to be right. And if it's right, we want to own it. If it's not the time, there'll be another time to own assets like that. And then there's the opportunity to own pieces of of companies through the equity. But as Warren's always highlighted, and again, this will be our approach to how we think around those companies, though we own a piece of a company. We own a piece of that cash flow. We own a piece of their balance sheet. It's not just a share certificate. And as we approach that, and really we'll approach it with the thought that we're going to own this company for the long term. It's, again, understanding what, be it the 100% company or the 1% company, do we thoroughly understand and thoroughly do we have a strong view of what those economic prospects of those companies will look like? And Warren said it earlier, 5 years from now, 10 years from now, 20 years from now. If we don't have a view of that, we won't be investing, be it 100% or 2% of a company through equities. We have to thoroughly understand what those prospects look like, and associated with understanding those prospects, we need to understand the underlying risk of the businesses. And it's really the investment philosophy and how Warren and the team have allocated capital for the past 60 years. Really, it will not change, and it's the approach we'll take as we go forward. Warren?
Yeah, and I don't want to go on too long on this, but
sorry, I covered it.
No. But this is important because it's very obvious that the country, for example, needs an incredible improvement, rethinking, redirection, even to some extent, in the grid. I mean, we've outgrown what would be the model that America should have, and in a sense, it's a problem, something akin to the interstate highway system, where you needed the power of the government really to get things done, because it doesn't work so well when you get 48 or 50 jurisdictions that each has their own way of thinking about things. And of course, in World War II, we called in people at $1 an hour, and we knew we had to turn out ships like crazy, and we knew that we had to convert Ford Motor from being a car manufacturer into an aircraft manufacturer in a matter of days, not weeks, not months. So you need that. There are certain really major investment situations where we have capital like nobody else has in the private system. We have particular know-how in the whole generation and transmission arena. The country's going to need it, but we have to figure out a way that makes sense from the standpoint of the government, from the standpoint of the public, and from the standpoint of Berkshire. And we haven't figured that out yet. I don't know whether Greg wants to even explain a few of the major problems, but that is a clear and present use of hundreds of billions of dollars. And you have people that set up funds and say they're getting paid for just assembling stuff, but that's not the way to handle it. The way to handle it is to have some kind of a government private industry cooperation similar to what you do in a war. And I don't think when they were doing the highway system, I don't think that the government set up its own guys that were going to pour all the cement or anything like that. But you needed a cooperation, and we're at that point, I think, in terms of energy. But I don't think we've made any progress, particularly, though. Tell us more about that.
Yeah, and I think these are very unique in that, not unique in that it's sort of reflective of where we're at. There will be very significant investment opportunities across a variety of industries, as Warren touched on in the electric industry or the energy space. We obviously know that well with our existing business, and the capital required to meet the long-term needs of what's currently projected as demand is enormous, and we as Berkshire will be in a good position to help address those needs. But the model around it and the risks that need to be addressed to deploy that type of capital will be different than they are today. Warren's point.
Yeah, the muscle of the federal government will be needed, but the test of whether you can have 48 or 50, depending on the nature of things, jurisdictions that are cooperating to do something that has opposition, will have opposition in every single state. If they'd taken a vote during World War II, or if they'd taken a vote on the interstate highway system, it would have been slowed down to an incredible degree. So the question is how to use these strengths that this country has to actually turn it in to what it should be capable of, while still preserving, a republic with 48 and connected and a couple of unconnected states, and it'll be interesting to see what happens. But we do have capital, and we actually have some knowledge that very few places have. I mean, we know what the game's about, but putting together that energy with knowledge and with capital and everything it's just not easy. And it should be something that we're capable of in the country, but the country was not designed for having, in a certain way, it was not designed for having 48 different jurisdictions that could mess up anything that you were attempting to do. And during wartime, it's one thing to get agreement, but during peacetime, it's something. It's a different problem. That's going to be one for the next generation. But it's important. Okay, station 10.
Good morning, Mr. Buffett and Mr. Abel. I'm Dorcas Tang. I'm 14 years old. My father, Warren Tang, MGRT CEO, brought me here for 2 consecutive years. And I promise I will come back every year, since I queue up at 2 in the morning every meeting you hold. My dad owned BRKA shares, and he said I need to work hard to earn my piece of BRKB. We are both are from China, Hong Kong, and I would like to ask, what's the essential element for a global teenager like me if we want to be part of Berkshire like Mr. Greg Abel? Like, what piece of knowledge I should learn so you will hire me in the future?
Well,
Okay.
if you're talking about the future, you better talk to Greg, so we'll let Greg answer that.
My final words, finally, Mr. Buffett. I learned a lot from this meeting, and of course I will come here every year. And I wish you can attend as many as possible, as you and Mr. Charlie Munger, the most respectful people, have inspired me and my father a lot. I wish you happy and healthy, and maybe one day in the future, we can make the world more prosperous all together, like you said. Thank you.
Okay, thank you.
Yes, well, I think your dad said it best. He highlighted that to become part of Berkshire, to own some Berkshire shares, you're going to have to work hard. And I think hard work takes all of us a long ways in life. And I would never diminish that. There's a lot of things that matter in life, but if you start with a great work ethic and have that attitude that you want to contribute, you're going to go a long ways in life, and you'll find great enjoyment, because as Warren said, you'll then, if you work hard, you're going to find the things you love in life, and it'll lead to that. And we truly look forward to the day you're part of Berkshire. Thank you.
Yeah. Keep a lot of curiosity and read a lot, as Charlie would say. Okay, Becky.
Dear Warren, dear Greg, dear fellow owners, it's such a pleasure to be here. My name is Revi Panida. I was born in communist Albania, but I'm now teaching economics in London, England. The wonderful writing of Warren and Charlie has significantly shaped my thinking and teaching. I thank you both very much for the many insights over the years. Warren has often written about the importance of Berkshire's earning power to owners. My question is, what was, in your estimate, Berkshire's earning power in the latest fiscal year? It would be great if you can comment on any significant items that either increased or decreased the earning power as compared to reported net income measures for Berkshire. Thank you.
Yeah, well, I think our underlying earning power was affected negatively here a while back by what happened in the utility field. I think that our earning power was not enlarged by any large acquisitions that come along, but they come along periodically. So we will see something at some point that well, could be, on the one that was $10 billion, we would have added to earning power. I mean, why else would we do it? So that's very situational. And of course, it depends so much on what the general market is doing and what interest rates are doing and what psychology is doing. We will make our best deals when people are the most pessimistic. That's been true ever since I was 1930. I was born in 1930. When I was born, things got much more attractive over the next 2 years, and apparently I didn't do anything about it there. But, that was the opportunity of a lifetime, and I blew it by, worrying about the kid in the next crib or something. But over my lifetime, I've had fabulous opportunities sometimes, and they happen because humans are human. And I don't, I'm fearful of all kinds of things. I don't want to try and, be one of the Walendas and walk on a tiny strip between a couple of twin towers or something, or whatever it may be. But I don't get fearful by things that other people are afraid of in a financial way. That the idea that if let's say Berkshire went down 50% next week, I would regard that as a fantastic opportunity, and it wouldn't bother me in the least. And most people aren't. They just react differently, and so it's not that I don't have emotions, but I don't have emotions about the prices of stocks. I mean, those decisions get all the way to my brain, whereas emotions can get bogged down some other place. So Berkshire will increase its earning power over time as we retain money. I mean, we are doing things, making decisions every day. People are working, we're retaining earnings. We will build the earning power, but it won't be coming in any even stream, and it certainly won't be matched dollar for dollar on either the upside or the downside and market prices. But that's what makes it a good business. The investment business is that everything isn't properly appraised, and the sillier other people get, the better your opportunities get. Okay, Becky?
My name is Patrick Nestor. I am 13 years old and from Tampa, Florida. I'm here with my brother John, who's 15, and my dad. Thank you for hosting this meeting. This is my first ever shareholder meeting. My question is, what high school class or activity helped influence you to who you are today as the greatest investor of all time?
Well, that's a good question. The teachers you get in your life have this incredible impression on you, and a lot of it are the formal teachers you have, but some are informal teachers too. I mean, I learned from certain employers, so much. You really hope you're learning from everybody you find who's well-intentioned and has had a lot of experience, and I had a lot of good luck in that. But I would say that where I was really lucky was my dad was in the investment business. So I would go down on Saturday and I'd wait for him to go to lunch with, and I'd read the books that were around there that nobody else ever read. And they talked to me, numbers talked to me. I could never get my fill of them, and then I discovered the public library, and I read every book there was on investments, literally, in the Omaha Public Library at 19th and Harney. And, I enjoyed learning about that. Unlike Charlie, if Charlie was reading about electricity, he would want to have known everything that Thomas Edison knew and more, and go through the same thought processes and understand how everything worked. I didn't care how it worked. I just cared whether it worked. And that's a limitation. I'm confessing here. I'm not bragging. As Charlie would say, I mean, people would always say if you could only have lunch with one person living or dead, who would it be? And Charlie said, I've already had lunch with all of them because I've read all their books, basically. And he really did it. I think having curiosity and actually finding sympathetic teachers is very useful. I ran into a couple of teachers that both in high school and college. In fact, I would say that I went to three different universities, and I went to high school in Washington, and at each place I found about 2 or 3 really outstanding people, and I just spent my time with them and didn't pay much attention to the other classes. And I was lucky to find something that really fit me very early on. If my ambition had been to become a ventriloquist or whatever the hell it might have been, it wouldn't have worked. I'd have spent hours and hours and hours, and I wouldn't have been any good when I got through. So I don't believe that. I think there was that book that talked about spending 10,000 hours at something. I could spend 10,000 hours at tap dancing, and you'd throw up if you watched me, But if I spent 10 hours reading Ben Graham, I would be damn smart when I got through. So minds are really, really different. I watch great bridge players, and I watch great physicians. People really, really, really have different talents, and I don't know. I think you're supposed to have 88 billion cells in your brain. I'm not sure that all of mine are flashing bright lights, but you are different than anybody else. That's what my dad always used to tell me, that essentially that, you're something different. It may not be good at the moment, but you find your own you find your own path, and you will find the people in schooling that want to talk to you. People that teach, in general, they love having a young student who's actually really interested in the subject, and they'll spend extra time with you. They'll do all kinds of things and I ran into that. I had Graham and Dodd at Columbia. Well, Dave Dodd treated me like a son, basically, and but I was interested excuse me, I was interested in what they were saying, and they found it kind of entertaining that I was so interested in. So I would just, I would look around at who you know, what really fascinates you. I wouldn't try and be somebody else. And then I would, you'll find the teachers at a school, and you'll find some outstanding people that are teachers. I've had at least 10 people that have had huge impacts on my life, and every one of them was positive, you know, because I got to select, in a sense, and a number of people really like helping younger people. You know, I found that in school, and probably helps to look a little bit lost and all that. Like you need help, but I would say my school experiences were good, but were really very good. But I attribute it much more to the individual.
My name is Saskia from Gifhorn, Germany, and first of all, I want to thank you because you made such a great impact in my life and the people I love, and that's priceless.
Well, thank you.
Mr. Buffett, imagine it's 1776 and you're sitting alongside Benjamin Franklin, helping to shape the foundation of a new nation. What core economic principles would you advocate for building a fair, resilient, and opportunity-driven capitalism society? One that supports long-term prosperity for future generations?
Well, I probably, that's a good question, but I would probably say to Ben Franklin, you just keep thinking and don't talk to me, because you'll come up with some better ideas than I will. He was, you know, incredibly remarkable person. I mean, you would say he's almost probably the last person to almost have a grasp of every aspect of activity in the country. He invented all kinds of things, and he incidentally, we were talking about power of compound interest and that sort of thing. He left a will that left a sum of money to Philadelphia and another sum to Boston that would serve as an example for a couple hundred years, you know, of the power of compounding and all kinds of things. He was so far ahead of his time that the best thing I could do if I was under that tree with him was be to get out of his way and let him just keep thinking. But he saw the problems that success could bring to a society, as well as other problems. I mean, more immediate problems that in all kinds of fields. But the problems of how to take 8 billion people, because there's no way we can separate ourselves from the rest of the world. We can be an example to the rest of the world, and I think it behooves us, since we have had all this good fortune in this country, and we do have a pretty good system. I don't think you get I don't think you get very far by lecturing the world on how you are the one that should tell them what they should do with their lives. I think you get a certain amount of resentment when just a few hundred years ago, a whole different group of countries were running the world, and now you start giving them advice, and I think it's a real mistake in communication or in persuasion to lecture a bunch of people where you've just won the game. I mean, but anyway, I would say that I would advise Ben to figure out how to win the game and keep a certain amount of humility at the same time. And I would tell him to try and design a system that doesn't invent too many things that can destroy the planet, that become uncontrollable once you get them out there. There was no alternative to us developing the atom bomb, but the expansion of the number of people that have the ability from 1 to 8 and 9 probably pretty soon with Iran. I mean, that's a mistake that society just could not afford to make. I mean, solving the problem with 9 variables instead of simply 1. Now, it's totally understandable. My dad was in Congress when the atom bomb was first used. It's amazing how Sam Rayburn kept the House of Representatives uninformed, because they're supposed to appropriate all the money, and he had 435 congressmen there, and they had no idea they were appropriating money for Los Alamos, or what was going on in Chicago, or what was going on at Tennessee. But anyway, we do have a society that is far beyond anything that Ben Franklin dreamt of. It's achieved some of it's moving toward, in the right direction, toward solving some problems where we made kind of broad declarations about all men being created equal and et cetera. And then we did some of the things we did. But generally speaking, we've moved in the right direction. But we face problems that I don't know how Ben Franklin would attack the problem of what you do once you get weapons of mass destruction in many hands, and when you essentially look at the world as something where there are winners and losers, and that the winners are, humiliate the losers and do all kinds of things. But I'll let the people that are a lot younger here figure out the answers on that. But it's still the most wonderful. There's never been anything you could dream like what has happened in the United States. So it's the best place and the best time to be alive by miles in history. Just think of a couple hundred years ago and somebody, yanking out a few of your teeth and pouring whiskey down you and the subsistence, and particularly in this Midwest. Just imagine waiting till the Missouri froze over every year just to see whether you could get your wagon across and maybe have a pregnant woman in the back. It's just amazing what has happened of a positive nature during my lifetime. And then the question is how do you keep it and how do you improve it? And I do think that fundamental to all of it, though, is having a currency that does not get debased. What that does to the stability of a society where all the people that trust their government get screwed, and all the people that figure out ways to profit off of it become rich or richer. I don't think you want a society that operates in that manner. Okay. Station 5.
Hi, Warren Greg. My name is Ping Huang Chen. I'm from Taiwan. This is my 7th time here. First of all, I want to thank you, Warren, for your generosity of sharing your wisdom and lesson. You changed my life, and you're my role model and my hero. And my question is, Warren, you mentioned that Mr. Apple would be in charge of capital allocation in the future. And I'd like to know your perspective on, is it easier for a business operator to be an investor or for an investor to be a business operator? Thank you.
No, that's a good question. I see we call him Mr. Apple even. Yeah. Thank you. Yeah, you'll take it. It's a lot tougher to be an operator. I mean, it's easier to sit in a room like I do and play around with money. It's just an easier life. That doesn't mean it's a more admirable life. It doesn't. But it's actually been a pleasant life for me, so I don't complain in the least. And I've been able to choose my friends, which has made an enormous difference in my life. I've never had to work for anybody that I really didn't admire. I mean, that's a luxury in life. I had 5 different people I worked for. And, they were fantastic, whether it was with the manager of the local Pennies, which is located, well, it used to be located a couple miles from here, and newspaper managers, everything. I have never been really disappointed by any teacher I've had. So, but I would have to admit that I have been able to choose what I do with my day to an extraordinary degree compared to be a business operator. And in many cases, I wouldn't like to compete to be a top-notch business operator in terms of some of the behavior that might be forced upon me. I am the master. I mean, I've found myself in this position where I can run the kind of company I want to run, and that's an extraordinary luxury. And